Consumer spending has been very strong. The note that we published relates to our annual back-to-school survey. And what we do in this survey is survey athletic specialty and sporting goods retailers, polling for style popularity. Stifel's been doing this survey for over 10 years. We get some great indications, and we're very encouraged by what we see from Nike. The survey indicates Nike's style popularity strong, consistent on a year-to-year basis, but importantly, greater breadth across their styles. And very encouragingly, we're seeing styles just released this spring, which are showing as the most popular, and that tends to be a leading indicator for future periods. So we feel good about Nike's product innovation pipeline, and certainly into this consumer spending environment, their capacity to execute.
The stock is the best performer in the Dow this year, up 32%. So have they stolen the mantle back from Adidas in the North American market after Adidas really dominated over the last few years?
Yeah, I'm glad you asked that question. A year ago, the narrative was that Adidas was coming on strong and going to eat Nike's lunch. And indeed, in our survey work, we saw that Adidas was gaining share. This year, we've actually seen Adidas popularity decline slightly on a year-to-year basis. More notably, however, the styles that are popular from Adidas are exactly the same ones that were a year ago. So we think Adidas is lacking newness. Consumers in this environment are demanding newness, and Nike appears to be well positioned with their pipeline.
Jim, I guess the question is, to what degree, the stock has built this in. It really is kind of extrapolating a lot of this good news. You're at 30 times forward earnings for Nike, basically as high as that multiple's been in 20 years relative to the overall market, basically the high for this cycle. So how much room is there for future estimates, I guess, to go up to meet that?
Yeah, it's a great question. We continue to like the stock and are constructive on it. And one of the reasons is that we're seeing a structural shift. Consumers are more frequently shopping directly with strong brands. Nike is uniquely positioned to execute to a transition to an e-commerce model. And that, of course, means more margin for them. So we're seeing a structural shift in their business model to a higher margin, higher return business, and we think that's deserving of a higher multiple.
Though there are better performing stocks in the space this year, Under Armour for one, Lululemon, also super strong. Everyone thinks the athleisure cycle is dead every few quarters. That's it, it peaked, it's over. That doesn't appear to be the case. How do you see it in your survey?
Yeah, sure. If the athletic cycle is dead, the consumers don't appear to be getting the message. The prevailing trend in fashion is more casual, not less casual, and that's just expanding the wearable occasion for a lot of these products. Each of the company's stocks has outperformed for different reasons. Nike based on a turn in fundamentals, Lululemon just on continued momentum and strength in their men's business, and Under Armour on the hope of margin recovery and some early indications under new leadership that they're tightening the ship.